Hello, I'm Brent Wilsey. With me is Chase Wilsey. We're from Wilsey Asset Management. And welcome to today's Smart Investing Daily Briefing. Well, today we've got some interesting things to talk about. We're talking about the first quarter earnings release. It's at the end of 2016 for the first quarter already.
I know, I can't believe it. I feel like I was just reading those 10Ks from 2015. Now I'm going to have to read those 10Qs from 2016. Well, not have to, but get to read those 10Qs.
Yeah, they're good reading. They really are. And the problem is that people are seeing expectations for the first quarter earnings are down 7%. But we know the reason for that, don't we?
Energy, shocker here,
Yep.
Oil and gas profits are expected to fall by 99%. So that's going to have a huge drawdown on the market as a whole, affecting that 7% drawdown that we're expecting to see.
And I don't think it's going to be that bad. I think that they're overestimating the downside, but we'll see if I'm right or not in probably, 3-4 weeks. But I don't think it's going to be quite that bad. But one positive in the first quarter earnings are consumer discretionary up 14%. They're doing very well.
And why is that? Because you're spending less at the pump, so you're spending more at the consumer discretionary. It makes sense. And this is expected to be the worst quarter for 2016, again, because of energy. And one thing I want to point out is if energy comes back, you're going to see those profits accelerate a lot quicker.
Yep. And also, too, we saw good GDP reports. We saw good consumer confidence. So we've seen some good things. So this does not surprise me at all. And we're going to have some good quarters. I think the third and fourth quarter should be the best. But just preparing people for the first quarter here. Let's talk about oil, because today the inventories came out. And once again, the oil inventories were up 2.3 million barrels, which makes no sense. But there's some other things going on that make more sense.
Yeah, gasoline saw a drawdown of 2.5 million barrels, and that's following last week's drawdown of 4.6 million barrels. So we're seeing people burn through gasoline, and refiners right now are operating at 90%. I think we'll see that operating rate increase.
And let's not forget about the summer driving season. Will be here in 2 months? A month less, I think. Yeah, I mean, people starting to drive already. So, but I do want to point out to help inform you more about the 4-week average supply of oil per day, because oil is just not for gasoline. It's for chemicals. It's for perfume. For all these different things. 19.5 million barrels per day is a 4-week average, up about 2.5% from last year.
Yeah, I mean, that's really not a surprise. I mean, people are using more energy, so the demand is definitely there.
Yep. So, again, don't just think it's oil, just for gasoline. There's a lot of other things as well. Let's also talk about a company today called Red Hat. I want to point this company out. We went way back to 2000. Now, you don't remember because you were probably in 2000. Well, we won't tell how old you were, but you weren't very old. But look here, back here, how high it was. It came out, and that's with the tech boom. And look at, never has seen that since. And we kind of tell people back here, this company was, we're going to take away from Microsoft. They do an operating system. We're going to take away from Microsoft, all the business. And it was a big hype company. It's never, ever gotten back to that. So now we look at the company on a fundamental basis saying, does it make sense? Hype is gone.
Yeah, hold on. The thing I want to point out is we always say, it's going to be different this time. The company,
right.
It's different. This company's so great. Well, all these people are, this company's so great, so great. Look at all the money you lost.
Oh, yes.
Don't overpay for a company ever, no matter it's like, this could be the greatest company in the world. I don't care. Be conservative and make sure you're getting a good deal on the company you're buying so you don't fall suspect to something like this.
And I want to see some comments from people that remember this, because Red Hat was going to take away Microsoft's lunch. They're going to put Microsoft out of business. It's going to be the next big thing, and it never happened. They're still in business, but investors, they've never made back their money since that time frame. So let's look at the company fundamentally again. Their operating system is called Linux. And Linux is an operating system that most people don't even know about. They're still around, but they didn't take away Microsoft's lunch. Didn't happen at all. Yeah. Their sales looking pretty good, though, up 15% year over year. The industry down 2%, so that's pretty good. Earnings also looking pretty good.
Yeah, earnings were up 13% while the industry was down 32%. So, they're doing a good job growing their sales and earnings, but I think it appears to be overpriced once again, because going out for February 2018, estimated earnings per share expected to be $2.62. Again, another company that abuses this GAAP versus pre-exempt basis. GAAP earnings expect to be $1.62. That puts their target sell price somewhere around $20.
Yeah, it's just not worth it. I mean, and right now the stock is $74 a share. Again, another hype stock, unfortunately. But again, people never got back to where they were before. We try to show you this, so don't get sucked into the hype. Look at the fundamentals, and again, Microsoft is still around.
If you're one of those that thinks, it's going to be different this time, always history does tend to repeat itself, unfortunately.
It does, yeah.
So don't fall victim to that.
That's why I try to educate you here. So again, you want to come in for a consultation because yes, this is kind of hard, this investing stuff. It's like, wow, what are these guys talking about? That's what we do with your money, with our money. By the way, our money is managed right alongside your money. Give us a call, 858-546-4306, or go to our website, smartinvesting2000.com.
And don't miss any upcoming daily briefings. Join our Facebook group, Smart Investing with Brent and Chase Wilsey.